No doubt about it. So we have 3 months under our belt now that have come in well above consensus. So May, June, and July, whether we're talking about employment, production, sales, you saw the housing numbers today. So this has been much more of a V-shaped pattern that happened sooner than widely anticipated. And in the teaser, you mentioned some of these really high frequency indicators that we can get daily and weekly that so far are showing some signs of life even as we move into August.
Right, the TSA numbers. I know you watch open table reservations, things like that. So we know that things flatlined during July. I think they're picking up a little bit again. Is that enough? Does it have to be stronger? Is it going to stay stronger? What role does Congress and fiscal stimulus need to play here? Because some of the estimates about the hit to the economy from the lack of extension look pretty scary.
Yeah, no doubt about it. So there certainly is some policy risk here. I think, it's probably premature to just go cold turkey on fiscal policy. That would be disruptive and certainly not helpful. We still have a depressed economy here. We're recovering faster than expected, but there's still quite a ways to go if you look at the labor market. And the stimulus rescue efforts have been important. If you look at total personal income actually holding above the pre-pandemic highs. And so that's gone a long way to supporting spending. What the market, I think, is telling us is either that the fiscal support will be extended or that the Fed is simply getting enough traction that the recovery continues, perhaps at a bit slower pace, but still continues onward from here, even if it's not forthcoming.
Let me ask you about the market. So in some ways, we're describing an economy that's catching up with the market's performance so far. How much of this rally can be sustained, and with kind of what vigor and for how long a period of time once we move from the catch-up phase, the rebuilding phase, to more of the kind of expansion phase?
Yeah, so, I think pretty much all of the gains can be sustained from here, but it's going to be slower going from here for sure. If you look at various valuation metrics, whether it's price to liquidity ratios or we use an adjusted equity risk premium model. So there's far less upside now than when we were back in the dark days of late March. That said, I don't think the market's unjustified in being where it is. What we were hearing a few months ago was that the market had decoupled from the fundamentals. The market simply looks forward. It's not always right. But investors are forward-looking, and as we just discussed, we've had 3 months of data that have come in far better than expected. So maybe the market's not so dumb after all.